please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I am Rima Tendulkar. With me is Nigel D'Souza, selling off a tad bit in the last 30 minutes or so. So now, given up all those gains that we managed to eke out in the first half of the trading session, so as we speak, absolutely flat on the Nifty, Sensex and the mid-cap index. It's the banks which is struggling, with the Bank Nifty down more than about 100 odd points. Some updates coming in on Reliance Communication. Well, they have agreed to pay 500 crores to settle the dispute with Ericsson. Remember, the background behind Reliance Communication in the Ericsson deal is that Reliance Communication owed Ericsson close to 1,155 crore rupees. They were trying to settle this dispute because Ericsson had taken Reliance Communication under the IBC process, and RCOM wanted to get out of it. And on account of that, they were trying to settle the dispute between the two and negotiating some kind of a settlement. And now we understand, I think that figure is 500 crore rupees versus 1,155 crore owed by RCOM to Ericsson. Does that mean the company is out of the insolvency and bankruptcy? We'll try and get more color on what's happening at the court proceedings at the NCLAT in Delhi today.
Hi, Rima. Well, the mid-cap index was doing a relative outperformance, but a few stocks in the last 1 hour, particularly that have come in for selling pressure. JP Associates, that stock has seen some selling. In fact, the mid-cap index, as we speak, has moved into the red. And Jubilant Foodworks as well has seen a dream run in the last couple of months. Now, that stock is down nearly around 5% in today's trading session. So keep an eye out on that stock as well. It's now down close to around 5.5%. But first up, I think we'll run you through all the top stories. Then we'll get chatting with a whole host of management. Profit booking in the last few minutes. A lot of stocks have seen some selling pressure. In fact, you have the likes of Jubilant that I just pointed out to. Balrampur Chini as well has taken a bit of a knock. And I think even PC Jewelers that did see selling yesterday, that in fact has come in for a fresh round on selling. In terms of the frontliners that are seeing some profit booking, well, you have Bajaj Finance, Dream Stock, that's moved to the low point of the day. Coal India as well. Remember, that one comes out with its set of numbers later today. There's an analyst meet tomorrow in Mumbai itself for the first time, I think, from the time the company is listed. That stock as well has moved a tad bit lower as we speak. But it's earnings season, the fag end of it. We have Walcher Nagar. That stock is on our radar. Remember, the company posted a mixed set of earnings this time around. The company's revenue fell, while in fact we did see margins have nearly doubled on a year-on-year basis. We have Mr. Pillai, the MD and CEO of the company, who joins us. Hi, Mr. Pillai. Thanks so much, sir, for joining us. Your margin improvement, that's something that the street likes. It's more than 20% now. Can you hold on to those margins, or do you expect it to return down to around those mid-teens?
If you really look at Walcher Nagar this quarter result, the Q4, it's been a fantastic result because for the last 4 years, on a PBT basis, the company has been making loss. And this is the first time in the last 4 years, in this quarter, we had a positive PBT of more than 2 crores. So that's been a very positive effect. Second, as I have been saying in my earlier communication, that after we took that specific funding from KKR, the company has started looking up. The EBITDA again for this quarter has been almost about 25%, which is the number which we are aiming for the quarters to come ahead and for the year ahead.
Right. Mr. Pillai, we have some pointed questions actually, sir. One is with regard to that EBITDA margin that you're talking about. That's good. You're saying you're doing more than 20%. Fantastic. Can you hold on to those margins? And secondly, the money that you got, sir, from KKR that you were just telling us about, what have you used that for? I don't think your debt has come down, so you would have utilized it somewhere, right? Give us clarity,
basically, sir. We had a 237 crores funding from KKR, of which we have repaid all the term loans that the company had with State Bank of India, IndusInd Bank, and Bank of India. Okay. So we do not have any term loans with any of the bankers today. Okay. It's only the working capital what we have. And some of the surplus money from KKR, almost about 40 crores, has been used for pumping into the business, which has really resulted in the last 2 or 3 quarters showing a positive trend in terms of the business. That was number one. Number two, if you really look at it, we have been focusing more on the manufacturing areas, rather slowly coming out of the EPC business and putting all our focus on the manufacturing. And this quarter, the manufacturing business has actually turned out almost 80% of the revenues when compared to the EPC, which has turned out only about 20%. So that is a trend which the company is going to put ahead. And as we said, the DNA of Walchanagar Industries will now be DNA, defense, nuclear, and aerospace. Yeah.
Okay, defense, nuclear, and aerospace. Let me come back to the first point about the debt and the working capital, etc. If you could give us an updated figure on the working capital as well as the long-term debt on the books of Walchanagar, and how do you foresee it in the coming months?
No, the working capital, what we have is almost about 350 crores, which we still would like to use it because the expansion in the defense and aerospace business is on the cards. Similarly, on the nuclear front. So one of the points which has been, the company has been going through, we were rated D for quite some time, which has been changed to BB in the last 3 months back. And with the results what we are showing now, I am sure in the next 1 or 2 quarters we should even upgrade our rating. And that will bring down my interest rate. The present interest rate which the company is paying is almost about 17.5%, which is astronomically high. And we are working with our bankers to bring down the interest rate. And I'm sure some positive, rather a good positive effect will happen in the days to come.
What's the total amount, sir, outstanding in terms of loan? If you're paying 17.5%, what's that amount?
No, there is no outstanding loan. It's only the working capital.
All right. So in a year, what kind
all the loans have been actually paid back.
Okay.
And it's only the working capital and the BGLC charges are the only things which we are having.
So what was the rough working capital, sir, that you had in the last year?
It's about 325 crores.
All right. So if you refinance, I mean, if you're looking at refinancing it even by around 200 basis points, you'll directly save nearly more than 6-7 crores approximately, right?
Absolutely, you're right. And we are working towards that.
All right.
Yeah.
You spoke about expansion in your nuclear as well as the aerospace business, right?
Absolutely.
Okay. Can you give us more color on that? How much is the company looking to invest? Where will that fund, where will those funds come in from?
Basically we are looking into the expansion. We have already done some small expansions in the nuclear business and, in the aerospace business. And we are again looking at increasing some of the machining capacities in-house to meet the ISRO's requirement. ISRO's plan from 6 to 12 and 12 to 18 launches per year. And we are totally gearing up ourselves to meet those requirements. That is number one. Number two, in terms of nuclear, because with this 10 new reactors coming up, definitely the Indian industries will have to play a very major role, and Walchanagar being one of the forefront. We are putting some more investment, and the money for the investment, we are also looking at strategic sale of some of the assets. That will be, some of the unutilized assets.
Can you give some color on the strategic sale of unutilized assets?
I can't exactly give you now, but definitely I can tell you that there are certain strategic sale is planned for some of the assets which we are today not utilizing them fully.
How much money can you get from these assets, sir? 100 crores, 50 crores?
No, it will be about less than 50 crores. But that should be more than sufficient for us to meet our expansion and capex requirements for this financial year.
All right, Mr. Pillai, we are running out of time, sir, but very quickly, if you could tell us what was your order inflow for the past year? What is your order book at? And since there's so much of talk about defense, what is the proportion of defense, in the total order book?
What we have is about 850 crores as of now, as of date.
That's the order book.
And that's the order book.
Okay.
And we have booked last financial year, we booked almost about 300 crores of order.
Okay.
And in this, the total order book, almost 25% is from the defense, only defense. The nuclear inflow is yet to happen, but defense, yes, has been a good inflow. Similarly, the missiles has also been a good inflow, both the Akash missiles.
And you'll stay profitable in FY19. It's the first time you reported a profit, as you told us. But FY19, all your investors can expect a profit from Walchanagar?
Definitely, we already finalized our FY19 projections.
What's
and for
that?
FY19, the top line, we are planning to have it almost about 512 crore.
Okay.
And our plan for the next year's budget, which has been approved by the board, is almost about 4 crores net profit, net PBT. So we want to have FY19 as a year where Walchandnagar will turn, is planning to turn around and becoming a profitable, from the red to come back to the black. And the team is working towards that.
Okay.
Yeah, we are. Yeah.
All right. Mr. Pillai, on that optimistic note, we'll leave it at that. Thank you very much for joining in, guiding for 512 crore of revenues in FY19 and 4 crore of profits for the coming financial year. The stock has moved from the lows of the day.
In terms of the frontline index, the Nifty has moved virtually to the low point of the day. We are down close to around 20 points as we speak. The banking stocks, they have come in for some profit booking. 200 points lower is what the Nifty Bank is at. Yes Bank has seen some selling pressure. ICICI Bank as well has seen some selling pressure. And it's not just the stock markets. You pull up the Indian rupee as well after showing a bit of a pullback in the last few trading sessions. That as well has moved to the low point of the day. So you pull up the Indian rupee, you'll see that the weakness has continued out there in comparison to the dollar. So we'll get that up as well, up for you on the screen, moving towards that 68 odd mark. Some weakness been seen on the Indian rupee. We'll keep an eye out on that front. But talking about banking stocks, well, United Bank of India has reported a fourth consecutive quarter of net losses. The bank's asset quality too has deteriorated this time around. The net interest margins, however, have improved on a sequential basis. Mr. Pawan Kumar Bajaj, the MD of the company, joins us. Hi, Mr. Bajaj. Thanks so much, sir, for joining in. Fill us in with some details, sir. What was the slippage number in the last quarter? How much of that slippage was from the watch list and how much of it was from the non-watch list?
See, as of December, our total gross NPA was around 20%. Now this position is means it has gone up to 24%, and it is mainly due to this 12th February RBI circular. So for which we have to classify almost 3,500 crore of advances as a fresh NPA. And if you see overall position, I think we have cleaned the balance sheet. Whatever earlier this standard restructured asset as of March 17 position was almost 5,000 plus crore. Now it has come down to roughly 479 crore itself, which is hardly 0.7% of our total advances. And we are hopeful whatever this 479 crore is there, it is all standard right now, and I don't think any slippage would be there from this thing.
Hold on to that
Mr.
thought,
Bajaj.
sir. Hold on to that thought, sir. We do have BHAL's numbers that are coming in there. The only number we have right now is the net profit. That's coming at around 450 crores. Our poll had thrown up a number of around 600 crores. Remember, in terms of a top line, we are working with double-digit growth, and margin improvement is what we are working with. So just keep an eye out on these numbers. For the time being, we only have the net profit number. The stock is moving higher, though the revenue number as well appears like a bit of a miss in comparison to the poll that we had thrown up. So 10,800 crores was the poll that we had. It's coming at around 10,100 crores. Those are the details that we have as of now. So we'll just keep an eye out on that. Anisha is with us as well. She'll be opening up the press release, trying to get you further details. Margins we're expecting is some kind of expansion at around 9% approximately. So we're working with expansion of around 200 basis points approximately. We are trying to get that number up for you on the screen. Remember the same quarter last year, there was a provision in terms of employee cost of roughly around 960 crores. So that's what's giving you a low base, and that's why we're expecting some kind of margin expansion. That number will come up for you on the screen shortly. Anisha is with us. We're looking to strong order inflow as well. Remember, the company has bagged roughly around more than 10,000 crores odd earlier. So we're waiting by EBITDA number. That's in for us. And that appears as a bit of a beat, actually. You know, if I just compare the top line, there's a miss of around 500 crores, while the EBITDA number, the absolute number, has improved by nearly around, it's beat our estimates by around 300 crores approximately. So we'll wait by for that number. Anisha's with us. Anisha, your first take.
Okay, so the numbers look good as far as the margin is concerned, because I'm looking at cost of material that has gone down for them. Yes, the top line is looking a bit weak, but I do see that they have changed the base number as well. So perhaps if you look at it, the growth must have come in line with expectations. The other thing that I would want to talk about is the employee cost, because that has again gone up, and it has come at 1,880 crores for them this time around versus 1,000 crores. So something that we'll have to watch out for, because last year also they had made a provision for that. I do not see any exceptional item or anything major, because the other expenses have gone down for the company. It's only the other expenses that have gone up, and despite that the margins look healthy at 12.1%. So I don't think that this would be taken negatively by the street. The top line is fine, because we are looking at a top line growth of 11%. Even if they have done around 9 to 10%, I don't think that will be taken to negatively by the company. I'll talk about the outstanding order book. That is coming at 1,18,136 crores. So now in the, during FY18, the order book had gone below 1 lakh crores. Now it is back at 1,18,000 odd crores. So, and we've also seen, Nigel, that of late their total order inflows, the stranded order book is coming down, and they have been getting a lot of orders. A lot of orders are moving for them, and that's the positive. So overall, in terms of the numbers, I think the real positive is the margins.
Yes.
Of course, we'll have to drill down deeper and see whether there is some one-off or there is just one-time impact that we are seeing, because I was looking at the segments as well. That also looked okay to me. Usually they have a power segment as well as one more segment. So that was all right. But other than that, I don't think there's anything disappointing in the numbers so far. I'll look at it in a detailed manner and see, because the cost of material has come down. The margin, despite the employee expense going higher, is looking good at 12%. So overall, Nigel, to me, the numbers look good. But yes, with BHL, there are a lot of one-offs. So it's difficult to call the numbers good or bad. We'll have to wait by and hear the management commentary. But by the looks of things, they look like a decent set.
Actually, Alisha, the revenues have come down on a year-on-year basis.
Okay.
It's the revenues are at 10,144 crore, which would compare with 10,248 crores. So there is a decline of 1% on a year-on-year basis. So yeah, you know, when the restatement has happened, the revenues have declined by 1%.
So, but Reema, if you look at the sales from core operations, that has remained stable. It is the other operating income that has come down a bit. And that is also because they have usually a lot of cash, etc., that they have with them, and that might have gone lower. But I don't think it's like a very big disappointment. Yes, it is a bit lower than what we were expecting, but I think the margin is what the street would like.
Absolutely. You know, I think that's what the street likes.
The core revenues is higher by about 3.7, 3.8%.
It is a miss. Undoubtedly, it is a miss when it comes to the top line. But what is really supporting is, I think, the margin number.
Yeah, the margin. I think
so
that's
what the street is
that's what the screen really is telling you, because the margin improvement is nearly around 300 basis points in comparison to our poll, and the street is taking that away. The margin improvement, it's that's why the stock is up close to around 4.5% approximately. But as Anisha said, when you have a flattish top line number and you're seeing your other expenditure reduced by nearly around 800 crores approximately, we need to find out whether there's a one-off for there, whether there is actually some cost rationalization that they've taken up.
Let's get a reaction. We are getting Sanjeev Zarbade of Kotak Securities on the phone line. Sanjeev, a big jump in the company's margins now at close to about 12% at the EBITDA level. That said, there is a bit of miss at the revenue level. Your thoughts?
We were like projecting around 9,700 crores in revenues and EBITDA of around 872 crores. I mean, translating into around 8.9% of EBITDA margins and profit after tax of 566 crores. So it seems that the EBITDA has been much higher than expectations, while the profits were lower than expectations. So there was also, as you said, a lot of mismatch between provisions for the quarter. So we need to see in terms of how the gross margins have performed for the quarter, because the price competition in the power generation equipment segment continues to be very strong, because there are 4 players with the significant overcapacity chasing very few orders. So we need to look at how the gross margins were performed, because the commodity prices were also higher. And if there is any other expenditure or any write back in provisions which has helped the margins higher, that is something that we need to see.
And Sanjeev, a word on the order book, because that has come in at 1,18,000 odd crores. How do you see that?
Yes, the order book has remained at these levels in the last several quarters. But our concern
Sanjeev, just a request, if you could come closer towards the phone line. You're not very audible, Sanjeev. You were telling us?
Yeah, our concerns on order book mainly stems from the long-term trajectory in power generation investment, and we have seen that very few power projects are getting finalized. So while the order book has remained at these levels, it is not declining, But our concerns remain on the future growth. It's more structural in nature than incremental in terms of how the order book has done over the last quarter. So we remain concerned on that front, because if you see a lot of these private sector developers are debt stressed, and a lot of power projects are still stalled. So unless then until there is some resolution on that front, we may not view BHEL in a more positive way.
Sanjeev, the other thing that is looking a bit concerning to me is that the EBIT in both the power as well as industry business has gone down year on year, though it has improved quarter on quarter. Now, the power segment EBIT has come at 900 crores versus 1100 crores that they reported last year. Even if you look at the industry segment, there the EBIT has come down to 57 crores versus 270 crore reported last year. So does that give you a sense that maybe the other expense lower is maybe some provision write back, or there is some one-off that has come into the numbers? Because other than that, the EBIT performance of both the segment does not look very strong. What's your word on that?
Yes, so there could be, because the company sometimes provides for in a very lopsided way, and it is very difficult to actually project what kind of provisions they would have taken for the quarter. So I think we need to look at the numbers and speak to the management and get a sense about how the provisions have panned out, and how it will pan out for the current fiscal, to get a view about the way the margins will move going forward.
Okay. All right. Thanks so much for that, Sanjeev, for joining in and giving us your view. I think you want to put a question forth? Or?
No, Abhineet, I just wanted to check with you. What's your call on the stock right now? Do you think the order environment for the company is improving? Because the revenue number still looks a bit tepid. It's grown by a paltry 3% number. And even if you look at the segment performance, there is some bit of nervousness regarding the EBIT figure. What's your call on this stock now?
So we are not positive on the stock, primarily because of not much of thermal capacity coming up in the country, because the government has more focus on the solar part, and given the current revenue base, increasing revenues from here looks difficult for BHEL. So we aren't positive on the stock as of now.
Okay, we'll leave it at that. Thank you very much for joining in. That's the word from SBI Securities, not gung-ho on BHEL, but there is a big surprise, a positive surprise coming in at the margin level.
But Rima, I would want to caveat it as of now, because the EBIT performance of the segments is not looking strong, and it's the other expenses that are lower. BHEL has shown us earlier as well that they come out with one-time provisions. So we'll have to wait to get more management commentary on that.
Core margins, you're saying, are looking a bit disappointing.
Yes. We can't say it with any fair bit of confidence whether it has gone up and the margin of that 12% is of the core business or not. So that's one thing that perhaps the investors should watch out for and not take the call right now, because it happens with BHEL. Usually they have a lot of one-offs and provisions going back.
Yes, the performance is a bit volatile for BHEL. The stock is higher, 3.5%, but off a tad bit from the high. As you can see, as Anisha was saying, power EBIT is down about 20% on a year-on-year basis.
Rima, you're lucky you track all these IT companies. Me and Anisha track some of these PSU companies, and these one-offs are something, the other expenditures, the employee cost.
Yeah. It's difficult to read.
Quarter 4 is very dangerous, because suddenly there's an employee cost hike, someone took their leave, they encashed their leave, VRS, gratuity. So
the employee cost has gone up to 1,880 crores versus 1,000 crores. So that's a big jump that we have seen. 800 crores, 80% jump. Wow. So I don't know what would employees get there, 80% rise perhaps. But yes, I don't know whether it's good for investors or not.
Okay, all right. Thanks so much for that, Anisha. Well, we still have the management, with us. We have of United Bank, Mr. Pawan Kumar Bajaj. Sorry, sir, to keep you waiting. We just had some breaking news and some results that are coming in there. But we just wanted to understand what's the outlook from here. You were telling us that your slippages were higher, your asset quality got hit because of the February 12th RBI circular. What's the outlook from here, sir? Do you think that the worst of the asset quality is behind you? Can you expect to grow your loan book from here? If yes, then what kind of a number, sir, are you looking at? Very quickly.
See, what we had done means what we are looking, because as I already mentioned that our restructured standard book is now only less than 500 crore. So we don't see any further slippage in the corporate account. And other thing is, we are re-engineering our advances book. We are more focusing on the RAM advances rather than on corporate advances. As you know, we have 75% branches in the state of eastern side, and there is a lot of scope in the retail credit, MSME and agriculture. So that in last year also we have witnessed a growth of almost 17% in RAM advances. So same focus will be on that. On the growth front, yes, we have given figures to the Department of Financial Services that what we want to achieve during the current financial year, and we are hopeful if we able to achieve that figure by September or December quarter, we will be back in black. And other thing is on the expenses side also, we are trying to reduce all those kind of things, and wherever we are feeling means loss-making branches are there, we are trying to merge with that and try to lessen the losses. And other side is, as we are in the eastern part, again on the we are known as a tea bank, so we are focusing on that sector also. A lot of scope is available this time because that industry is doing well. So like number of things are in plan, and particularly on the recovery front, so we have made means recovery teams at all our 36 regional offices, and they are means focusing on the OTS up to 25 lakhs account in the small sector, and otherwise whatever this NCLT cases are there, we are involved in the two list of 19 cases. One case is already settled, which I think everyone knows, and in time to come, if even half of that amount comes back, I think bank would be very comfortable on that front also.
What is your exposure to the NCLT cases, sir?
6,000 crore. One case is already settled around 600, so rest is 5,400 crore, which we are expecting by some cases in June and some are in September. Those will be settled. So once that will be there, there will be a write back of almost what we are presuming around 500 crore. So that will give a boost to the bank.
All right, sir. Thank you very much for joining in. That's United Bank of India. The stock has moved higher after the management commentary saying the residual stress in the book is less than 500 crores, and they're optimistic about things improving as we go ahead. Let's turn our attention then back to the markets. The key indices are now in the red. The Bank Nifty is now down close to 180 points. Ashwini Gujral joins us on the show now. Ashwini, seem to have lost our way, and the benchmark indices off from the morning levels. Your thoughts?
See, we failed at yesterday's highs. So clearly the market seems to have concluded that the path of least resistance is on the downside. Particularly, all of these NBFCs and financials which were running up, they have turned around fairly sharply. So my sense is that from here, the second half, you should see strong profit booking coming into Bank Nifty as well as the financials. So right now is a good time to take short positions. Today's high becomes a stop. And for the moment, Raymond is a sell with a stop of 1035, target of 985. India Bulls Housing is a sell with a stop of 1225, target of 1180. And Bajaj Finance is a sell with a stop of 2100, target of 2025.
Ashwini, the short is on both the Nifty as well as the Nifty Bank?
Yes, I would think so, because the market basically has failed at the 20-day moving average. So now yesterday's high not crossed, today's high not crossed. So there is a bit of a ceiling that's available. And given that this was a short covering rally, at least 50% of this rally can be given up without anything much changing.
Okay. Any thoughts on Jubilant FoodWorks? After a splendid run-up, it started correcting. Today down close to about 5%.
Well, again, touched previous highs and came off sharply. My sense is it could have a bit of a correction and probably could go back to 2450 thereabouts.
Okay, all right. Thanks so much for that, Ashwini. Well, we have Rajat as well who joins in. Rajat, what picks do you have for us today?
I have two buy calls in the May futures. Just Dial, which is showing a lot of momentum. I will put a stop loss below 605, although the price has gone up since I sent the recommendation. But you can use the same stop loss or you can adjust it accordingly. But the target remains 666, 666. is my target for Just Dial. And the second counter is Kajaria Ceramics. I would put a stop loss below 559, and my target would be 585. Both are intraday trades.
Okay, thank you very much, Rajat, as well as Ashwini, for joining in. Let's get the early rates up from the European markets. The UK market will be opening up after a day's gap. So the early rate on the FTSE is actually down close to about 0.8%. The CAC2 is slipping, so a cut of about 2/3 of a percentage point coming in for the French index.